the contractors aren't just going to eat that. So it's kind of something that uh, you have to budget for it, but you have to budget some contingency. But it's hard to budget when things change as drastically as they did in such a short time.
All right, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital. Today we are joined with Dr. Jason Balara, CEO of Lark Capital Group, and known for the Why Podcast. Host combines his veterinary experience with a passion for real estate investing, his dedication to improving veterinarians' financial wellness, and combating high suicide rates in veterinary field. Jason, if you could let the listeners know a little bit more about yourself.
Yeah, sure. Thanks, Josh. As you mentioned there, I'm a veterinarian. I've I guess, would say dual tracked in my life. I started in construction and, kind of real estate on the residential side, really since I was a teenager, a bit out of necessity. But I was the kid, also one of those kids that always wanted to be a vet. So they kind of went hand in hand. I used real estate uh, on the residential side to help, did things like house hacking and bird, live in flips, just to help pay bills as I worked my way through college and vet school, and then on to my training into becoming a veterinary surgeon. Then in 2020, I really looked at, kind of getting more serious as a real estate investor, I guess more, or maybe not so much serious, but finding a way to scale it more than I had. And that's when I really dove into syndication. And so I have spent, sort of the last now 4 years, um, really digging in on syndication, learning that model of investing. And it was just this year, or last year, I guess, in 2023, when I've really felt this disconnect between my veterinary world and my um, real estate world, and I had always kind of kept them separate. And friends and stuff knew that I knew construction and would ask me to help them with their houses and stuff. But it was something that I always thought were two different worlds. And it was in 2023 that I sort of really came to the realization that maybe I could combine those two things and do it through impact and sort of helping the veterinary community, giving back to my friends and colleagues, and just that community that I had worked with for so long.
Got it. And you're still in the veterinary field, correct? Still practicing?
Yes, I am.
Got it.
I am still practicing.
That's a good background, especially the construction piece with real estate. That definitely enables you to kind of see the through the walls in certain levels of what needs to be done, what can realistically get done for the pricing that the estimates are coming in for. Especially when you compound that with economies of scale. When you've got, say, 100 units of renovations, you can kind of see if pricing's coming in on target, if it can get done with labor and material.
Yeah, exactly.
How has that helped you with your real estate investing?
I mean, it's helped me a ton. Like I said, when I started, it was really out of necessity. It was like I knew I wanted to own. Bought my first house. It was the classic worst house on the block. Needed a lot of renovations, and I basically just I wanted to own, and so I figured it out, and I did that by some of it was trial and error, but I also went and I just started working for or with contractors so that I could learn the trades, and having that knowledge and that background, it helped me a lot in my own houses, but now it helps me, as you mentioned, at scale in the sort of multifamily space. And it really it allows you to understand kind of, okay, what is needed, what if someone speaking the language of the contractors. I've been the contractor, so it's kind of like, okay, we can talk on that same level, and then translating it to the business plan. It makes for it allows me to sit in a good position of that, kind of in between orchestrator of the two sides, sort of executing that business plan, and being able to pass it on to the boots on the ground.
Yeah, that's huge. You can realistically set targets and completion dates, and get ahead of things before it becomes an issue too. Kind of forethought.
Yeah.
Tell us a little bit about your real estate journey and getting into multifamily, and then your first purchase of an apartment complex.
Yeah, so like I said, I started that journey in 2020. I live in Los Angeles, and so investing sort of where I live was not something that I saw as really the right strategy at the time. So I started looking into, sort of that long distance investing, and that's where multifamily really makes a lot of sense because you are going with economies of scale. You are using third party property management, so you have the ability to run it as a business and not necessarily have to be there every single day. Although coincidentally, I'm in Atlanta right now, which is where most of our properties are. But
Nice.
it just is something that when I started looking on the single family side, and I thought, no, I want to do this at scale. So I went and did a mentorship, and I did a mentorship for a year with Ellie Perlman at Blue Lake Capital, and it took a while, and I think a lot of people maybe struggle in the multifamily space in the beginning because it doesn't happen quickly. It usually does take quite a while to get your first deal under contract, and for me, that was about 9 months after starting the mentorship is when I got that first one under contract. But then, and that was in summer of 2021. We closed. There were some delays. We closed in December of 2021. But the interesting thing that people always talk about, that kind of law of the first deal, closed the second deal also in December of 2021. So
Nice.
there was you quickly gain velocity. I think once people realize, whether it's the brokers or people you might be partnering with or vendors, you quickly realize, is this someone that is actually serious about it? And so the first one might take a while, but then usually you can get in there pretty quick or get to the next one a lot quicker.
Yeah, let's get into the first one there. So you closed it as far as the size of it, and then how you all
Yeah.
closed as far as debt goes, and then maybe what caused the delays. Because a lot of things come together, a lot of people come together during the under contract phase, the diligence, the title, the debt, the bank, everything. So if you could just
Yeah.
walk us through that.
Yeah, it was a 76 unit apartment complex in Decatur, Georgia, so just outside of Atlanta. The the debt was, and this is, people who know the market. This is kind of what everyone was doing in 2021. It was bridge debt, and we had the construction costs kind of rolled in as the ability to draw those funds as we completed construction projects. Um, the delays were debt related, as they often are. So the initial lender, this was an interesting situation. The seller had I think they were trying to develop their own lending arm within their company. And as part of the contract, they wanted us to use their lending arm. And it turns out that their lending arm didn't perform, wasn't able to close the deal. However, we were at least smart enough to put something in the purchase and sale agreement that said if they didn't, we were allowed to then go out and find a different form of financing. And so that was the main delay. So we kind of went through the pieces with their lender, and then it just wasn't going to work. They kept coming back with lower and lower proceeds, things like that. So we said, okay, well, now we need to go out. We go find our own lender, which we did pretty quickly. I think we had about a maybe 45-day delay overall, and it was an interesting experience. The market, I think a lot of people know, was super, super hot. So the other thing is then the seller decided they wanted to raise the price in the middle of all that. So I think for people listening, getting into the space, understanding that it is not uncommon to face hurdles going through that, sort of transaction process. There's going to be hurdles after you close, but this is stuff that happens, and it's very daunting in the first deal, but then it just comes to be sort of part of how it goes.
What was the purchase price on that one?
That was 7.6 million.
Got it. Okay. What was the capital raise?
2.8 million was our raise.
Nice. Do you all go for retail investors, family offices? What's your primary focus?
Retail investors.
Okay, good deal. Very good.
Yeah.
So you got the you found a new bank, and you rolled the construction into the bridge, and then you start the renovation process, executing the business plan. Tell us about how that goes with communication between you all, the property management, material, labor, all the good stuff.
Yeah, and that was so obviously 2021 was, still there were a lot of still COVID restrictions going on. The eviction moratorium was in place in Atlanta until November of 2021. So right after we closed, the eviction moratorium lifted. Maybe should have seen this in hindsight. Maybe I should have seen this coming, but there was such a backlog of evictions from a year plus long moratorium that the processing of evictions was incredibly slow. And so it was fairly easy to kick off the exterior renovations and get that, kind of right off the bat. We had, like I said, we ended up closing two right around the same time within 2 weeks of each other. And so it was, you could do all of the exterior things pretty quickly. So we finished exterior siding, roof repairs, tree trimming, parking lots, really signage, kind of everything that we wanted to do on an exterior basis was finished within about 8 months. But it was difficult to get access to the interior units because it was difficult to get anyone evicted. And the people that were staying were paying their rent and often in many cases willing to absorb rental increases up to market rent. So there was maybe the big challenge that we faced is, I think, prior to COVID happening, people were, it was not unreasonable to think you might renovate 10 to 20 interiors in a month. Like that was happening, I think, on a regular basis, but it was just hard to get people out. Materials and labor, certainly those costs had gone up. Even from the time that we got the deal under contract to the time that we closed was a super hyperinflationary area or period. And so it was what we had estimated for interior renovations went up probably about 60% at
Wow.
that point. And it actually came back down, interestingly. So I talked to some other, a lot of friends in the that are builders, and talking to some that are residential, like custom home builders. And one of them was saying that at that same time, they would have people under contract or not under contract, under construction. And then, hey, by the way, material costs just went up 50 grand. What do you want to do? Do you want to put the project on hold? Do you want to, kind of, because the contractors aren't just going to eat that. So it's kind of something that you have to budget for it, but you have to budget some contingency, but it's hard to budget when things change as drastically as they did in such a short time.
Yeah, so you've got a mixture of everything. You've got tenants that are not paying, that they need to be evicted. You've got material cost on the rise. You've got materials that you can't even get. You've got labor shortages. You still got a bunch of the unknown, and you all have just purchased the asset. So then there's communication, of course, between you all and property management. What to do next? I'm sure you all had your break even occupancy as far as cash in, cash out. What were some things that you all did to kind of hedge against the unknown?
Yeah, so we did a couple things. Obviously, you talked about budgets and things like that. We had to look at some of the things that we planned on doing and see where we could save and if we could scale back any of the scope of work on the interiors. That's definitely one step we took, because we had really intended probably. I think what most people would consider just a full scale renovation, new cabinets, stone countertops, that kind of thing. So we scaled some of that back. We were fortunately, it was the interiors that were the big problem, because we were fortunately able to negotiate or change scopes of work on most of the exterior stuff and stay kind of within budget there. So the interiors were the big struggle, and it's the part that's probably also, this is not, if for people that understand construction, like, it's not hard to believe that would be the part that would be maybe have some unpredictable pieces, because you're going to have things that come up as you're renovating a unit that, oh, hey, we need to also do this subfloor, or hey, we need to
Yeah.
adjust the electrical here, or this, this appliance doesn't work that we were going to keep, that kind of thing. It's a lot easier to look and say, we need to replace all these roofs. Go get, 3, 4, 5 bids from roofing contractors and just find the one that's right. It's just a different ball game there. And then with those interiors, you're also looking at, you're not talking about, this is just one house. You're talking about essentially, however many units are in the apartment complex. And so each of those units could have its own little hit list of surprises, but you just have to be uh, sort of aware of what that maybe middle of the road's going to look like. And some are going to be a
Yeah.
little better, and some of them are going to have some change orders.
Yeah. Yeah, no, absolutely. And I know we're getting kind of stuck into this one property, but it's super helpful kind of going through your experience with the unknown of everything that was happening, plus the budgeting, and then how it all played out, because those are real case scenarios where it can still happen again. Because
Yeah.
down the road, if you're under contract and you close at a certain time frame where other things happen, I mean, it's just it kind of goes into the planning for the unknown, having contingencies in place to
Mhm.
where you can still pivot, operate, and make sure that everything can run, I guess, really the best of your ability with any circumstances. And as far as like contractors and giving bids, I mean, it's so fragmented to try to get different pricing, because one company can do it all versus some companies can just do certain things, and
Yeah.
makes it tough on pricing.
Yeah. You
But
have
go ahead.
you have sort of, I think there's three aspects to asset management. There's construction management, there's the leasing side of things, and then this financial management that ties them both together. And it's kind of juggling all those balls and keeping them going. And same thing, you have three pieces of the puzzle when it comes to renovations. You just sort of alluded to it. You have price, speed, and quality, and finding the best combination of those three things. Is like,
Yeah.
you might be able to piece together a renovation by finding a flooring company and a HVAC contractor and a painter, and it might be a little bit less, but it's going to take you, potentially twice as long to renovate that unit as having someone in there. So you just have to look at all of the costs associated with it. And in a rental aspect, downtime, an unleased apartment is certainly a cost.
For sure, and that's every day that goes by is another day you will never have an opportunity to gain back as far as revenue.
Right.
It's gone
Yep.
forever. So, for sure, it's a part of it. So let's get into to starting a fund, and why you took this approach, and why you feel like that's the best way to move forward purchasing apartments.
Yeah, I think there's a number of reasons. I think the why I started it, I talked a bit earlier about just kind of wanting to bring, sort of my two worlds together. And so I actually had lunch with my mentor. That the mentorship is over, but we've stayed close, and had lunch with her, and she was kind of asking me, it was beginning of 2023, like, what's next for you? What do you want to do? And it was actually her idea. She said, you should start a fund. And I like, honestly, I find capital raising is probably the most challenging part of, especially right now in this market. But I've just always found that the most challenging. Some people are fantastic about it. I like asset management. I think acquisitions is not easy, but like, I can handle those things. But capital raising has always been daunting to me. And so she said that, and at first I was sort of like, that's not for me. But then the benefits of a fund are number one. I think right now, especially being able to take advantage of opportunities, right? So the team that can step in and close an asset and be there, have the funds available, you're going to be able to take advantage of those opportunities
Yeah.
better than someone who's like, if you're both bidding the same amount, or maybe your offer is slightly lower, but you have proof of funds and the ability to close. Right now, people want surety of close, and so that seller may be willing to sell an asset to you for less. I think it allows the fund allows diversification. It's just there's a way to kind of structure it outside of just one single deal at a time with funds. And for me, as someone who I don't love capital raising. it was actually made sense to me to just have it be something that was going to always be going on. So instead of making it this, oh, we have 30, 45 days, we have to raise all this capital, let's just make this part of life where we always are working on this. And it's all about, education and communication to potential investors and kind of showing them what we're doing. And for me, it really had to have some level of impact in there for me to get excited about making that kind of
Yeah.
an all the time thing.
Yeah, that's huge. What size fund are you managing?
It's a $10 million fund.
Okay, got it. That's a good size. Being able to execute on a property quick is a huge advantage.
Mhm.
I mean, it's the ultimate advantage because you're right. Certainty of close is everything, especially right now. Capital
Yeah.
markets just constantly
Yeah.
swinging left and right. For sure, absolutely. Is
Yeah.
that a closed fund at this point?
No, it's still open. We have, hypothetically, to the end of the year to close it. Hopefully, it won't take that long, but it's still open right now.
Got it. Very good. Let's go into the importance of impact investing and your take on that.
Sure. It's. I guess I'll say I don't like to force. I don't think impact, charity, those sorts of things should be forced on people. I don't. I I guess that's it's important to me. It's important to my family. There's definitely a struggle in the veterinary community that I'm a part of. I think most of us vets know someone, we're close to someone who we lost to. They took their own life. It's a startlingly high statistic. I think it's female veterinarians are 3.5 times more likely to commit suicide than the general population. So there's a definite problem there, and then there's an organization committed to sort of trying to help with that, fix that problem, and so it made sense to have that be the impact focus of this first fund. I don't know that it'll be what I do for every fund. There's other causes that we're very passionate about, and I think I would love to kind of expand that reach. But to me, it made the idea of a fund more compelling. We're donating 25% of the profits on the back end. So this is after investors get paid. So this is really just coming from um, our company, Lark Capital. If people want to invest, if people want to donate, they're more than welcome to. But like I said, I don't want it to be a forced thing. But I certainly believe in the ability of real estate investing to grow wealth. Well, why not use the power of that to then also kind of create impact in whatever causes we would like. And like I said, this one will be for Not One More Vet.
Yeah, that's huge. You're able to tie your personal career and ambitions into real estate investing, and then also able to bring other people in to help contribute your passion. That's huge. That's great.
Yeah.
What would you recommend somebody wanting to get started in real estate, whether they're not sure if they want to be on the LP side or the GP side, active or passive? What would you recommend that their journey look like?
I think I actually feel like that's probably maybe the first question that a lot of people should answer, is if they want to be on the active side or the passive side. And sometimes that's hard to decide. But I think mentorship, uh, for sure, if you're going active. There's also some benefit to mentorship on the limited partner side, but there's a lot of just free materials out there. I think get educated and get to the point of being able to make the decision of active or passive as quickly as possible. Like that, to me, that's your first step. And it's very, very good idea to start passively. That's what I did. My first investment in syndication was as a passive investor. It allows you to kind of see the process from a very high level, and also make money while you do it. So it's kind of like there's some big benefits to that. I think it depends on what your financial situation is at the time. Many syndications funds, you've got a large initial investment, which is great. But if you don't have it, maybe you're going to go towards education and mentorship first to kind of learn the business. So it does depend on what your scenario is. I think a lot of people talk about this, but kind of looking at what your end goals are and just reverse engineering that, I think is really important as well.
Yeah, that's perfect. That way they gain clarity and then figure out their path from there, and they're on their
Yeah.
way to financial freedom. I like it.
Yeah.
Very
And then
good.
take action. You've got to do something, right? It's like you can do all the education in the world, but then you have to go ahead and do something, whether that's, and there's, you just have to decide that this is something that's important to you.
I think once action's taken, everyone's like, man, I should have been doing this sooner.
Right.
Like the
Right. Yeah.
first one. So very
Exactly.
cool.
Yeah.
If somebody wants to reach out to you and learn more about yourself and your company and possibly invest, how can they get a hold of you?
They can email me directly. It's jason@larkcapital.com, or they can go to our website, which is larkcapital.com. We actually just had the website recently redone, and it's like, I think now super user friendly. So I'm very happy with where it's at. If someone wants to talk to me, there's links to set up calls. Like I said, they can email directly, but they also can go right through the whole investing process and get to the portal through the website.
Very cool. Definitely look forward to following you, and we will certainly talk soon. Appreciate you coming on the show today.
Yeah. Thanks for having me, Josh. I
All right.
appreciate it.
Thanks, Jason. All right. Bye.